Good morning, everyone, and thank you for joining us, charting a course in support of the UK Long-Term Asset Fund. I'm now going to pass you on to my colleague, Neil Coxhead. Thanks, Neil.
Thanks, Ali, and thanks to you all for joining our latest Waystone webinar on developments in the UK funds industry. Our topic today is the Long-Term Asset Fund, or the LTAF, which has probably generated as many column inches in the industry press over the last couple of months as return to office strategies. I'm joined today by three LTAF subject matter experts: Peter Capper, the Investment Association's Fund and Investment Risk Specialist; Lora Froud, Partner for Investment Funds at Macfarlanes; and Andrew Berry, the Head of our ACD business here at Waystone. Over the next half an hour or so, we'll give the LTAF tyres a good kicking to provide you with an update on the implementation timeline, the regulatory dynamics, product distribution, assessment of value and costs, and a service provider model that you'll need to put in place for the LTAF. We'll then wrap up with some thoughts on what firms should be doing next. So with that, let's start the ball rolling, and a question to Peter, just around the implementation timeline. Peter, where are we in the launch timetable? Can I ask you just to provide a summary of the current status?
Yeah, thanks, Neil. So we have an open consultation from the FCA on the LTAF, which is CP 2112. This is a fairly short consultation period and runs out on the 25th of June. So if you're planning to respond to that, it's worth getting a move on. The consultation is looking at the structure and the initial distribution rules of the LTAF. In terms of the timeline as well, it's also worth mentioning that the FCA, H&T and Bank of England have formed the Productive Finance Group, which consists of both trade associations and corporate firms, which has been meeting since January to consider barriers to investing in long-term asset funds, long-term assets, should I say, through the ecosystem. And this will be presenting its findings in July. So there's a lot happening in a fairly short space of time, in other words. Thank you, back to you.
Thanks, Peter. Good, useful to know for the audience in terms of the timeline. Lora, just coming to you in terms of the conversations that you've been having at Macfarlanes, what level of interest have you seen from the investment managers today?
Yeah, there's been an enormous level of interest from managers, all creatures great and small, actually. We've had the biggest sort of, household name institutional managers who will undoubtedly be looking at this as an option for them, particularly if they've already got the capability of operating sort of liquid retail funds as well as operating alternative illiquid funds. This suits them perfectly. But actually, we've also seen a lot of interest from smaller boutique managers and also from alternative managers who've never really dipped their toe in the retail waters before, and they're quite excited to look at this and work out if it's something that they could do to diversify their investor base. So I think it really could appeal to any kind of manager, really, and certainly everybody wants to talk about it at the moment.
Thanks, Lora. Andrew, just coming to you from a governance perspective, it appears that the LTAF will operate in a very similar way to our traditional UK open-ended investment companies or OICs. What do you see as being the main challenges for an ACD in supporting the new model?
Yes, thanks, Neil. I think, yes, I see it will be an extension of the source book as we see it today. So I see we will likely get its own chapter that it will deal with the various elements that apply to an LTAF, just like we see with other funds, whether it be a quiz fund or an ACS that we see today. I think from the challenges, governance is important. That's a key area of focus across the whole industry in terms of funds and their structures. So I think investor outcomes, ensuring that we adopt and adapt current processes that we have in place, and we certainly adapt those to ensure that we can oversee an LTAF fund appropriately and for ensuring those investor outcomes. I think an area as well for myself would be the administration partners. and LTAF will bring some challenges around the operational functions, whether that be looking at the illiquid asset types and the valuing of those on an ongoing basis, also around the investor servicing piece, around gating and the delays that investors may see in terms of their orders placed around the actual settlement. So those are the key areas I think are the challenges to an AFM or an ACD.
Thanks, Andrew. Just looking at the regulatory lens of the new LTAF, and I note with interest that the Chancellor has gone on record as saying the LTAF will be launched by the end of this year, which all seems rather challenging given where we are in the process and the input that will be required from the regulator. Peter, how do you see the second half of the year panning out? You mentioned earlier the consultation is due to close within the next week or so. How do you see the second half of the year playing out?
Thanks, Neil. Yeah, I think you're right. This is it's a very ambitious target, and obviously the ambition is very much welcomed, but it also brings its own challenges too. So, the FCA will be looking to move quickly on its final rules, and our expectation is they'll be looking to publish something in sort of autumn, certainly early autumn, to allow enough time for firms to start putting applications in for this. I think one of the challenges is going to be managing expectations. Everyone wants to see LTAF come really, really quickly, but it typically takes quite a number of years for new fund regimes to really sort of gain full momentum, full traction. And this is a very radical model, and it will require a lot of changes in the broader ecosystem. So I think our expectations is that there will probably be some early movers who are ready to move quickly and will look to get sort of funds launched quite quickly. But it may take a bit more longer to roll it out to the wider ecosystem. So I think that's how we see things playing out. It'll take a little bit of time to really get going, but at the same time, we know there are some organisations who are quite keen to move quite quickly when the final is published.
And I suppose, Laura, just coming to you, the $64 million question here is sort of given the wide range of topics on which the FCA are currently focused. Do you think we'll have time to implement the LTAF by the Chancellor's stated launch timetable by the end of the year?
Yeah, I think there will be time to launch an LTAF, but query whether it will be the LTAF that people will necessarily want. And the reason I say that is because we'll come on to look at distribution shortly, but as currently stated in the rules, the opportunities for distribution are perhaps a bit narrower than we'd ideally hoped. And so I think at the outset, it will be possible to launch an LTAF that can be distributed to the DC world, as well as to institutional and sophisticated investors. It may be harder to launch an LTAF in the kind of high net worth space, the wealth managed space. So there will be the opportunity, I think, to launch an LTAF before the end of the year for certain types of investors. But that does rely, of course, on all the sort of service providers and platforms and operational community, if you like, coming together and making this happen. So I definitely think we're going to have a set of rules, and we're definitely going to be able to get going. But it's making sure that all the sort of background, behind the scenes elements work properly.
And Peter, just picking up on the point that Laura made there about the rules, are there any early indications on how the FCA will incorporate the LTAF within the current rulebook?
Yes, so the FCA are proposing that the LTAF will be a new chapter in COL, Chapter 15, which I think Andrew mentioned a few minutes ago. They are basing it initially largely on the quiz rules. So they've taken the quiz rules and they've adapted those and placed some more. They've slightly broadened the investment powers and placed some more restrictions around borrowing, and also increased the governance requirements. So that does give the potential for it to be potentially a broader distributed investment. So perhaps sits somewhere in the middle of the current sort of professional regimes and the current retail fund regime. So I think what we'd like to see probably is the quiz. The LTAF will be treated initially as a quiz in lots of other parts of the handbook, which does bring some problems, especially on the distribution rules. And I think we'd like to see the LTAF more decoupled from the quiz, so that it can be, in particular, looking to expand that investable audience, which he thinks should be acceptable, given that there's a lot of investor protections being applied to the LTAF.
Thanks, Peter. And Andrew, just before we move on to the topic of distribution, I just wanted to pick up on a point that you mentioned earlier. The concept of an independent asset valuer is pretty limited in the UK authorised fund space at the moment. How do you see firms adapting to that particular requirement, given that it's going to be a key element of the LTAF?
I do see it as a challenge to the asset management industry, the ACDs and the AFMs. I think today the concept is really seen around property funds and real estate funds having those independent valuers. So it's not something unseen. And I think there is some good knowledge in that area. There are a number of property funds directly holding real estate assets. So it's really looking in that space, and the AFMs ensuring that they're appointing that independent valuer. It's important to have those conversations early. Obviously, it needs to be adaptable and the right valuer to the right asset class. So clearly, there's property experts out there, but clearly on the private equity type space, that's where, again, it's going to need early engagement and early appointment of those relevant skilled valuers to ensure, again, ultimately, it's achieving the right valuations, robust valuations for the outcomes of investors.
And Laura, just picking up on that reference Andrew made to skilled practitioners, do you think firms need to be thinking about how they support or oversee the LTAF from the FCA's senior management and certification regime? Are we likely to see a new category appear within SMCR covering LTAF?
Well, I'm not sure about a new category as such, but definitely it does require consideration. The senior manager that is responsible for the prescribed responsibility for authorised funds will have responsibility for the LTAF. And so it will be important to make sure that the LTAF is built into the governance arrangements, and not least because the LTAF does actually have enhanced sort of governance requirements as opposed to sort of existing authorised funds. So in addition to the assessment of value, which everybody is now becoming increasingly familiar with, there will be similar reports required in the context of conflicts of interest, due diligence, liquidity management, as well as value. So there is enhanced governance here that will need to be built into existing processes.
Excellent. Okay, that's an important point for firms to consider, and those of you on the webinar who are existing UK senior managers need to factor that into your own thought processes as the development of the product heads forward. A couple of you have mentioned distribution, so let's change gear a little bit and start talking about distribution. And Laura, you mentioned earlier, and I think we've all seen references to the new LTAF being positioned both as a vehicle for DC pension schemes, but also potentially for private banks, wealth managers, family offices to set up for their investors. How do you see the new LTAF being distributed, either initially or over the long term?
Yeah, absolutely. So this is absolutely critical, and I think the work of the Productive Finance Working Group that Peter mentioned earlier is going to probably be quite illustrative here as to where things are going on this. But I think at the outset, the FCA has been very clear, as I mentioned, that they're happy for the LTAF to be distributed to DC schemes and also to institutional and sophisticated investors. That's fine. I think the FCA has left the door open to and is sympathetic to a certain extent, distribution of the LTAF to a certain sort of a certain level of mass affluent investors, if you like. They definitely don't want this marketed to retail, deep retail, and I think we all agree with that. But I think with Woodford and with London Capital and Finance, the FCA is feeling like it's had its fingers burnt, understandably, and is very nervous about where to draw the line as to what kind of slightly more sophisticated retail should be allowed to access the LTAF. And so I think it's very much welcoming a discussion on this, looking for suggestions as to where that line ought to be drawn, where that threshold ought to be. So I think, you know, some of the things we've been thinking of, you know, should it be the case that as long as an investor has a professional advisor, a professional wealth manager, that it would be okay potentially for them to invest in the LTAF? Should there be a certain level of threshold sort of wealth, for example? Should it be limited to a certain amount of the investor's portfolio for them to invest in an LTAF? So there's all these kind of questions and things, I think, nuances that the FCA is welcoming views on and is willing to consider. But my feeling is that for the version of the LTAF that will be available later on this year, it might be that that is only available to VC, institutional and sophisticated investors, and we might need to wait for a second version of the LTAF potentially next year that is open to a slightly broader range of investors.
Okay, that's useful for product managers and or heads of distribution to consider as they work through their business plans. Peter, just picking up on another product development related issues, and with a doffing of my cap to our industry and the fact that we love an acronym within it, the European version of the LTAF, the LTIF, has been around for a couple of years now with arguably limited success. Can you perhaps give us a few thoughts on the key differences between the LTIF and the LTAF, and how do you see the LTAF being perhaps more successful?
Yeah, I'll just start off by saying I think we are, to be fair, we are more recently seeing, I mean, and as we are seeing some increase in the launch and investors going into the LTIF, although that does seem to be restricted to a fairly small number of markets within the EU. And to date, there's been absolutely no take-up in the UK, for example. It's also worth mentioning that the European Commission are currently looking at the LTIF rules. So this, but the rest of my response may not age particularly well. But we shall see. So I think probably some of the key differences at the moment, certainly as things stand at the moment, are that the LTAF is likely to be more of an evergreen structure. So rather than having a sort of limited life cycle funds that the LTIF has, and will be open-ended, which have the benefit of allowing sort of fairly regular subscriptions, whereas the LTIF has a single sort of fundraiser at sort of launch and then gets locked up for a number of years. And it will allow periodic redemption intervals as well. Whereas the LTIF, there is some scope to have redemptions later on in the life of the LTIF, but certainly the first few years, the capital is completely locked up. So other key differences, I think, are that the LTAF rules are going to be much more principles based, whereas the LTIF rules are much more are sort of much more prescriptive. So, and one of the key benefits we see of the LTAF is that it will allow LTAFs to invest in other professional funds and other collective investment schemes, whereas the LTIF rules on this are very restrictive. So effectively mean you have to start investing from scratch in private market assets, which is much less attractive. So I think it's fair to say both have stricter investor protection rules than the AFMD rules apply to professional investors. In our sense, that probably some of the greater flexibility potentially makes the LTAF more attractive, and I think it's especially going to be attractive to investors who have perhaps regular sort of cash flows and looking to invest sort of cash flows regularly, which is very difficult to do with the current closed-ended structures. Perhaps though, where maybe the LTIF has an advantage over the LTAF rules as consulted on the moment is that it does provide greater retail access to retail investors who meet certain thresholds and receive advice and suitability assessments. And as we've already discussed, the what's on the table at the moment for LTAF is a bit more limited. And I think we feel that ultimately this will need to be addressed ideally from day one. But if not, it will need to be addressed fairly quickly after the second round to really allow the LTAF to reach its full potential and properly compete with other products.
Yes, and Laura, I know that from a Macfarlanes perspective, you've produced a very handy appendix to some of your LTAF documentation comparing LTAFs, Eltifs and some of the other products. Anything you'd like to add in terms of that compare and contrast between the two products?
Yeah, I mean, I think they'll just end up being used for very different markets, as Peter said. I mean, I think there is no take up at the moment of LTIF here in the UK. As Peter says, no distribution at all. The distribution markets, as we see them really for our clients, have been Italy, Spain, and actually the Italian take up has really been largely because of the tax incentives for Italian investors to invest in an LTIF. So I can very much see the LTIF continuing to be used in Europe. I think the LTAF will be used much more domestically here, and particularly obviously with a view to VC. So I think they both have their uses, but they'll be used for different things. So I wouldn't see them as competing products.
Very good. And just moving on now to another very topical subject here in the UK, and Andrew, I know a topic that's very close to your own heart. I'd like now just to focus a part of our conversation on the assessment of value. And Andrew, like most firms within the UK industry, Waystone have been wrestling with the required assessment of value reporting process on behalf of our UK domiciled funds. How do you envisage the LTAF fitting into the assessment of value regime?
Yes, thanks, Elliot. I think you're right. I think the whole industry has been wrestling with the assessment of value and the reports that have been required. I think people have been through their first and second iteration of those, I would say, over the last sort of 18 months or so. I see the LTAF fitting firmly into that. I see it will get no dispensation. I think it's another fund within the rule book, and therefore the requirement will be to treat the review of that as like any other fund. It has its own challenges. So I see one of those maybe looking at, when you look at assessment of value, it's not just about value and costs, and there are going to be some costs to setting these structures up that may be borne by the fund. So that needs to be taken into consideration. But equally, when you're looking at value and performance and that ultimate outcome, I think from an investor point of view, what is the peer group? These are going to be some new funds. It's really identifying how you would compare that outcome and what peer group that should be. When you look at a long-only equity fund or a multi-asset fund, which is very prominent in the industry, I think your peer groups are very easy to identify, but this brings a challenge to itself. So as an ACD, we will be looking, at making sure we identify that right peer group, making sure the objective for the funds is very clear, and we can demonstrate if value is being achieved for the investors.
Thanks, Andrew, and apologies, Laura. I seem to be directing all of my $64 million questions at you this morning, but do you get a sense of how much it's going to cost a firm to set up an LTAF?
Yeah, I think that is a difficult question to answer, not least because I think, certainly from what I'm seeing, the LTAF, it could be used for such a diverse range of strategies. And so, for one client, it might be that you're setting up a pretty liquid credit fund with say, monthly dealing, versus another client where it's an infrastructure strategy with perhaps sort of, opportunities to redeem every 2 years, which are really quite different beasts. So very, very difficult for me just to give one figure, I guess. But I mean, I think it would be prudent to be budgeting, I don't know, maybe between around £50,000 and £70,000 for the legal fees for this kind of a product. But it might be more depending on how challenging and unusual the arrangements are.
Thanks, Laura. But I guess the point here is that firms should certainly be factoring in some sort of product development budget for the LTAF process. More to come over time, and certainly more to come through informed conversations with different practitioners. And with that in mind, and I'm conscious that we've got a number of service providers on our call this morning, Lora, perhaps I'll give you a slightly more benign question to come back to. Who do you see as being the key service partners for firms looking to set up an LTAF? You mentioned the importance of appointing the right law firm, but I assume there's going to be different asset services, different providers that are going to need to focus in on the product to make sure that they're fit for purpose.
Absolutely, and actually that was a point, I guess, going back to your last question around cost. Actually, in contrast to sort of regular authorised funds, I could well see quite a good piece of work up front on really going through the portfolio, liquidity management arrangements, etc., to make sure before you even start looking at the documents that everybody is very clear how this fund is going to work and is comfortable with that. And that is at the point where you definitely need to be engaging with service providers, because you need to make sure you've got partners who understand how this is going to work and can accommodate the strategy that you wish to pursue. So obviously absolutely key to find the right host, authorised corporate director, assuming you don't have that function in-house, and one that not only understands the UK authorised fund world, but also has experience with the asset class that you are looking to go to market with, because without that, it's going to be very, very difficult for the ACD to support you. So same with depositories and administrators, they have to understand the asset class and they have to be able to help you with the dealing frequency that you've selected. So very, very important to pick the right service provider. And of course, you need the right law firm too. Couldn't let that one go without mentioning the law firm.
And Andrew, just picking up on that, it's almost as if Laura's passing the ball to you for an open goal with this one. From a Waystone perspective, we're supporting similar illiquid structures in other domiciles. So what do you see as being the key areas of expertise that perhaps we can bring to the governance model?
Yes, no, you're absolutely right, Neil. Across the group, we have, I would say, deep knowledge in the teams where, let's say, across Ireland and Luxembourg, where some of these structures are more familiar. So whereby the asset class might have been a real estate type fund or a debt fund that had much more liquid assets. So there's knowledge within the team there on the value in the administration. And actually, there's a much wider, I suppose, link in with the administrators. We have a huge relationships with a number of administration partnerships, across Europe. So I think we can really draw on those experiences to assist in getting the right structure, because I don't think there's one model. You need to totally understand the asset class, as Lora has said, and it may be that one administrator has a deeper knowledge of the map than another. So that's important to really understand that. And I think, across the governance part again, and alluding back to governance, it's ensuring you have the right committees, whether it's valuation committees and equally the directors, ensuring you have the right knowledge in your directors and your independent directors to ensure we get the right challenge when there's a value that's been proposed for the frequency that we're looking to issue that price for the fund. So yes, I think Waystone, we certainly have that knowledge, and we can bring that to the table to ensure we get the right structure for the clients here.
And Peter, just from an IA perspective and the leadership role that you're taking with pulling together an industry response to the consultation, any insights that you're getting from any members on the service provider model?
Yeah, so I should probably just quickly emphasise that the IA clearly can't endorse any individual firms. We're not in a position to do that, but I think it's fair to say the FCA are really going to be looking for expertise at the AFM level. I think they'll want to see that expertise is completely independent from the portfolio management function. So we'll want to be relying on the portfolio manager giving sort of indicative valuations, etc. So it's going to be a massive focus on governance. I think valuations is going to be a really big focus of this. So getting the right value. I think there's probably I mean, the FCA especially find they want either an external valuer, or if it's going to be done internally, then they're putting some fairly high thresholds on the knowledge, skills and experience that the AFM must be able to demonstrate that they're doing that. I think we've already mentioned depositories and transfer agents will also be key, but also I think the fund accountants and also I also think it's worth engaging with distributors and auditors and so to make sure the auditors are happy. It's far best to sort of iron out procedures right from the start of the life of the product than to sort of have your auditors come in about a year later saying we're not too happy with this. And also the distribution network, I think it's really important to consider that. How are you going to bring it out? What are their challenges? What are their what will their needs be? There'll be a lot of work to do in that area, especially in the early years, I think. Yeah, I think so it's really important to consider. I think everyone's skill set in this, and operators and I think administrators are already signaling to us they'll want some sort of standardization, in terms of how sort of notice periods work and so on. So it's something that's without committing ourselves too much. It's something that we may have to look at in terms of sort of help with industry guidance and bring different stakeholders together. Due course.
Brilliant. Thank you very much for that summary. So finally, I'm just with an eye on the clock. Let's draw the conversation to a close. Andrew, perhaps firstly to you, what would your advice be to firms thinking of launching an LTAF? What do you think the next action should be?
Just two things really in summary. One is just touching on, extending on that point that Peter just said, really around governance. So as businesses, we've got to ensure we adapt the governance structures as they are today. We can't just assume they're right for operating these type funds. So that's looking at the skilled people, the knowledge people, to ensure we can oversee that and ensure we can manage anything around the conflicts with managers, all of those good things. And secondly, early engagement with our administration partners, because they're going to be key to the whole structure and operation, whether that be our custodians, our depositories, our fund accountants, our transfer agents. There's going to be some nuances for the dealing with anything with the dealing frequencies and the asset types. So yeah, early engagement. Yeah.
And Laura, anything else to add to that one?
Really just to elaborate on what Peter was saying about engaging with distributors, I think that's absolutely key. It's all very well having a product that works in the way you want it to work, but if it's not going to work for platforms or distribution partners, then it's not going to go anywhere. And I've seen clients launch products in this space before with slightly unusual features and have very quickly had to kind of row back or adapt. For example, where they've put in place dilution levies and they've had to change to dilution adjustments, for example, for this particular market. So that there are lots of little things that will need ironing out. So it's very important to engage with distributors.
Brilliant. And Peter, just finally with you, I guess as an industry, we have an immediate action. The consultation period is due to end in a week or two's time. So I assume one of the immediate deliverables is for firms. They still have the opportunity to provide their feedback, their thoughts through firms and bodies like the IA. But again, to you, what would your advice be to firms in terms of next actions from an LTAF perspective?
Yeah, just to start with that, any feedback you can give on our consultation response will be very, very much appreciated. But the deadline for member comments is tomorrow, on the 18th. So it's so not a lot of time. Other than that, I mean, I can only emphasise what the other panelists have said is to really engage early, find the right stakeholders you need to engage with. I'd also suggest potentially that if you're looking to launch an LTAF early, you consider reaching out to the FCA as well as law firms and sort of any sort of host AFM or other service providers you're using as well, because that can then potentially iron out anything that it might help to focus your application on what the FCA will be looking for. You can potentially rule out things the FCA won't be happy with potentially early on. Obviously, I can't make any undertakings on behalf of the FCA as to how much they will, and they certainly won't want to commit to anything or pre-approving anything. But the same time, so early discussions with the FCA are often very helpful, especially with unusual applications, we say, or new and innovative applications such as this. So, I think it's really emphasised. Don't hesitate to pick the phone up to the FCA if you're considering something in this area. Thank you.
Super, and with a view just to bringing things to a close, I'm conscious of time. I'd like to pass on my thanks to Lora, Peter and Andrew specifically for sharing your various insights over the course of the last half an hour. Thanks to everybody that has attended. And if you do have any further questions or require further information, please do let me know. I can direct those questions to any of our panelists and make sure we get answers across to you. The webinar itself has been recorded and will be sent round to all of you in the next couple of days. The recording will also be available on the Waystone website. And a transcript of our conversation is being created and again will be shared via the same media. So please look out for those and please look out for our next Waystone webinar, which is likely to cover either the assessment of value and or the UK approach to ESG and SFDR, so other topical subjects. But thanks for joining and I wish you all a good rest of your day.